I just wanted to comment very quickly. People were talking about the results that they see in their gurus. And I got to say, I agree with everything that you guys just got through saying. Especially, there was one other thing, and this happened to me about a decade ago. I've been running Trading Trainer for almost 20 years now, teaching folks how to trade equities and options and all kinds of good stuff like that. But we actually got asked by the Federal Trade Commission to kind of not publish our results, and we asked why. And this was not just me, this was Greg Polis over at Profits Run and a couple of other people back in about 2006, and we said, why can't we show our results to our prospective clients and to our clients? And their answer was, because they're not you. They can't do what you do. They don't have the experience you do. It's all right to show your other customers that are more like the potential people who you'll be working with, but showing your stuff is misleading. And I agree with that. I do actually, I have a portfolio that I set aside for my clients where I trade their picks. So when people come to my workshops and say, AJ, I'm interested in XYZ, and I'll actually trade it and keep that posted. And that seems to have not raised any alarm bells. But the last thing a lot of us gurus want to have is, like, black government helicopters landing on our front lawn. Anyway, with that said, I believe that I am sharing my program here, and I've got an hour and 15 or a little bit less now. I've got a program today called The 3 Simple Steps to Generating a 7-Figure Income. And it's around something that I call the instant income calendar. And I'm actually going to put right into the, I believe I can put it right into the chat section. At any point here, this is the link that we set up for today for this event. You can go check out what we're talking about. But let's get going here, because I got a lot of information for you to take, and I've got a lot of stuff that I think that you can use after just this presentation. You're welcome to come be part of our programs, but I always want to leave people with stuff that they can take away. Hey, this is the government mandated disclaimer that those guys in the black helicopters told me that I had to say at the beginning of all my presentations, which is, of course, any information, charts, or examples contained in this presentation are for illustration and educational purposes only, should not be considered advice or endorsement to purchase or sell any security or financial instrument. We cannot give any financial advice. No employee or person associated with us or registered or authorized to give financial advice. We do not trade on anyone's behalf, and we do not recommend or receive any payments from any brokers. So now that we got that stuff, I'm AJ Brown. I got a quick question for you. Most of you have your hand-raising button on your webinar software. By the way, if you press that orange button with the white arrow on it, it'll squeeze that webinar control panel off your screen, freeing up a whole bunch of valuable screen real estate, so you're not having my presentation blocked by something up in the upper right-hand corner. So that might be useful for you if you haven't been part of these webinars in a while. But one of the things you'll notice is a hand-raising button. And Jeanette's allowed me to see all of you're like a little classroom here. I can see all of your hands. In fact, if you want to try to raise your hand, I'll see it go up and down. Exactly. Very good. So what I wanted to do really quick is ask how many of you with show of hands even have any experience with me, know who I am. Oh, cool. A few of you. That's awesome. And for those of you that don't, I'm AJ Brown. I founded a company called Trading Trainer about, let's see, it's 2018. I started trading in 1997. I started Trading Trainer in 2003. So that was when we officially opened our doors, so about 15 years ago. A lot of people call me the world's most disciplined option trader. The other nickname I have is the world's laziest option trader. I like to get the most return for the least amount of my time and money. I have a couple of ebooks out there, home study courses. This is the home study course that you'll find on a whole bunch of people's successful traders' bookcases. A lot of times those folks like to consider me like their little secret weapon, or at least that's what they've told me that they like to call me. But I do want to tell you that there's not much special about me. I'm a learner. Got a degree in mechanical engineering with a focus on automatic controls. So I've got quite a few engineering degrees, but I never used them. I actually left college and started being an entrepreneur. I started, actually, interestingly enough, with tattoo studios. That was very popular in the early 90s, and it was in a early adopter growth phase. And then owned a bunch of tattoo studios, ran a bunch of tattoo studios, moved on from 2 tattoo studios, went back into the technology world, worked for some battery companies, big batteries, the time like Tesla Powerwall type batteries. Then went on to working for Hewlett-Packard and all kinds of good stuff like that. But really stopped working for anybody in 2005, 2 years after I started Trading Trainer, because teaching folks and doing my own trading is probably my favorite thing. And one of the things I've really gotten into is actually something called accelerated learning, and that's where what I can teach sticks. I use methods in the way I talk and the way I present that helps me leave you with information. So let's get started. When I started training, I lost real big. I spent about $27,000 on seminars that first year. This was 1997. So in 1997, they didn't have much of this offering on the internet. Instead, you went to hotel seminars on the weekend. And so I spent $27K on that. And then I spent $85,000K trying to invest on those things that people were teaching me on the weekends, and wound up finding that a lot of the stuff that people were selling and teaching just didn't work. Or maybe it didn't work the way I was doing it. The scoop is, and I'll give you this hint later, but I found that nobody who was hawking a product on trading, all of them that promised some sort of like magical crystal ball or secret indicator, or it's all a bunch of marketing. There's nothing crazy secret about, I have a special way of doing this that nobody's ever done. That doesn't really exist. And if somebody is telling you that, then I would like you to hightail it out of that room and ask for your money back. There is, I feel, a process for success. In fact, I've actually honed this process, I feel, where if you follow these steps in this order, you have a higher probability of success in trading. And so I'm big on process. I'm big on using acceleration tools, things that can get you through your process steps faster. But there's no special secret sauce, and again, I believe that if somebody's telling you that, you need to run the other way. One of my claim to fames, really quick, is how I started a foundation to get inner city kids off the street and teach them instead how to invest, take their aggressions out of gangbanging each other and instead gangbang the market. I had this investing turtles experiment where I taught 9 inner city kids how to invest in the markets, and I expected to just waste my time, and I was pleasantly surprised in that these kids turned around, not only gave me back the seed investment I gave all of them to do this, but most of them went on to buying their own computers. They were doing this at the public library, and I don't know if you've been to a public library lately, but in a public library you're only allowed to use the computers because there's such a line for about a half an hour. So they were able to pull off their investing research and do their investing at the public library with just 30 minutes of exposure time per day. And some of them went off to buy their own computers. One of them paid himself through college over at Denver University. So I'm very happy about this. And this is actually why I created Trading Trainer, because after a while I realized with the foundation that it doesn't, it doesn't fuel itself. Helping people learn how to better themselves, giving them the tools they need, isn't profitable. And so I created Trading Trainer in order to basically teach people who could afford my training, give them the tools I've created for myself, teach them what I know, make them successful, and then all the profits from my company go right back into my foundation so I can do it for people who can't take care of it. So it's kind of a neat little scenario. What that means is that myself and my coaches, we don't make any money in teaching you. If you talk to a lot of these gurus out there, you'll realize, especially if you count the number of people that they're talking to and the number of courses that they sell at whatever, $497, $1997, whatever their price point is, you realize that they probably aren't trading anymore. With our situation, you can talk to Coach Jay, you could talk to myself, you could talk to Coach Neil, Coach Meg, and all the folks that work here at Trading Trainer, and you'll realize they're all volunteering for the foundation. They have to trade themselves in order to continue to live a normal life. We have to do our own trading. I created that on purpose to make sure you know that you're dealing with somebody who's in the same situation as you, not somebody who traded 10 years ago, wrote a course about it, and now makes his money or her money selling you stuff. So that's kind of a neat little situation that we've made here, where because none of us is actually working for money, we're actually working to make sure we've got our thoughts solidified in our heads, and also for the foundation to make sure these kids are doing well. Last year we graduated, we're in partnership with the Chicago Board of Options Exchange. We graduated over 700 kids from our program after that initial 9 in 2003. We've grown our program. But yeah, so when you're dealing with somebody here at my company, you're dealing with somebody who is supporting himself or herself on their own trading, because they're not making any money at Trading Trainer, I can guarantee that. So we have this thing that we like to do here. It's called our instant income calendar investments, right? These instant income calendar investments that I want to tell you about today, the 3 steps to do them, are less subject to wild swings or devastating losses. They're definitely immune to downturns in the stock market. What happened in the last 8 weeks didn't bother any of us here. They can be structured to profit from downturns, actually. They have built-in profit buffers that can actually be structured upside down. And the folks that are actually pulling off these investments, they're earning more than 6% per month. Now, one thing I'd like to do before I go any further is kind of run a little, I have enough time here, run a little experiment. I got a quick little video here. So let me cue that up for a second. And we'll go ahead and get this going here. And it's my experiment on the whole penny thing. So let's do that right now. It starts with a simple question. Would you rather accept $50,000 today or have a penny that doubles every day for a month? A lot of people would take the $50,000. It's a nice lump sum. I'm sure having $50,000 in your bank account right now would solve a lot of problems. Most amateur investors would take it, but I wouldn't. In fact, professional traders would take the penny every time. Why? Because while after 2 days it's only 2 cents, and after 3 days it's still only 4 cents, after 4 days it's just 8 cents, but if we keep doubling day after day, at 10 days we've got $5.12. Now we're getting somewhere. At 15 days, we've got $163.84. At 20 days, well, we've got
$5,242.88. Now it's starting to look like real money. At just 24 days, a little over 3 weeks, we're at $83,886.08. We've finally overtaken the $50,000 lump sum payment. At 25 days, we've got $167,772.16. Unless you live in Manhattan or San Francisco, that's enough to buy a house. By day 28, we're at $1,342,177.28, which means you're now a bona fide millionaire. And by the end of day 31, at the end of the month, we're at $21,474,836.48.
So as you can kind of see there, that's like the best bet, if you will. I'm not sure if you can really attribute it to Albert Einstein, but it's said that he said compound interest is the most powerful force in the universe. So if you want to be the lazy investor like I am, or the most disciplined investor, then what you're going to do is you're going to take advantage of that. Now, we are not going to be earning double our money every day. There's been a couple of trades I've had in my 20-year experience that have doubled in the day, more than a couple, but you can't consistently work on that. So what if we earn 6% on our money every month? That actually, if you compound it monthly, will more than double your portfolio every year. And so that's where that number 6% comes from. We strive to invest our portfolio completely and earn 6% or more per month. And actually, for the folks that have been working the program pretty heavily since about last April, with the market the way it has, especially in the last 8 weeks, they've been hitting double digits, not just 6%. But we target 6%. We target the stars, and hopefully we hit the moon, right? So your investment will more than double every year. So that means if you have $1,000, then at the end of 2 years, you'd have $2,012, or at the end of the first year, $2,012. And then in 2 years, you'd $4,048. In 5 years, you'd be up to $32,987. Then, of course, in 10 years, you'd be a millionaire, right? And that's kind of where we'd like to go with this program. We'd like to basically build ourselves a golden goose that gives us golden eggs. So if we had a $100,000 portfolio, we could actually take a paycheck every year of $101,219.65. And that's very powerful, because I'm in it for the marathon, not in it for the sprint. I'd like to be here in just a few years. There's so many people who come to me and say, AJ, I'm in my 50s, I'm in my 60s, I never thought about, retirement. And now all of a sudden I want to retire, I want to stop working, and I don't have the nest egg to do it. So that's what I'm always thinking about, and I'm thinking about how I can do that with the least amount of my time, the least amount of my investment dollar, and get the biggest return. Last thing I want to do is sit in front of a computer all day replacing my day job with yet another day job. That's not interesting. So what are we actually investing in? So what we do here is we invest in option premium. We sell option premium. Now you might be saying to yourself, what does that mean? Well, you got option premium, right? An option price, it's equal to two components. There's this, in fact, let me pull out my drawing stick here. And in the money value plus what we call our premium value. So every option price has those two pieces in it. You can always calculate what it is in the money, and then whatever's left over is what we call the premium. And that premium is what we're selling. If you sell it right, if you architect your trade correctly, you basically sell the premium, and then on a certain date on the calendar, option expiration date, whether that be weekly or monthly for you or even quarterly, you get your payback, right? That's what selling premium's all about. There's 3 components, by the way. So if I fast forward here to the next concept piece, get rid of my chicken scratch. You might be saying, okay, I've heard of these options or I've even traded them, but do you really know what they are? Well, it's a derivative, and its main purpose is for the market movers out there to hedge their risk against stocks, indexes, and exchange traded funds. But that's not how we're using them. And I can't wait to tell you about how exciting it's got in the last 8 weeks. A lot of people have been saying, in the last 8 weeks, I'm pulling my money out of the markets and I'm going to go bury it in the backyard or hide it in the mattress or put it back into a CD or mutual fund. But it's actually gotten better for us in the way that we sell premium. So we focus on 4 simple transactions. We like to write covered calls. We like to write covered puts. That's flipping our covered call upside down. And that means that we profit up to the downside rather than to the upside. Writing covered calls against leaps and writing covered puts against leaps. By the way, I have white papers on all of these topics that I've written that have gotten a lot of traction in the trader's science world. So if any of you are ever interested in those white papers, you can just reach out to me. So let me, with that said, I have an explanation video I'd like to show you that is a little bit more succinct than I am. So let me cue that up for you really quick.
You buy a stock. Let's pick Amazon. At the time we recorded this video, it was trading at $1,416.78. The June 15th $1,420 call option is trading for $121.75 per share. You'd buy the stock and sell the call option. You earn a $12,175 instant dividend, and you own the stock. Just like our hypothetical real estate deal, we've got 3 potential outcomes. If Amazon closes above $1,420 on June 15th, your stock position gets called out of the market for $1,420 per share. You earn a $3.22 profit on the stock. You earn $121.75 per share from the option premium. That's $124.97 in profit on a $1,295.03 investment for a 9.6% profit. This is our ideal scenario. If Amazon is flat by June 15th, you keep your stock position with no loss or gain. You earn $121.75 per share from the option premium. You've got an 8.6% profit on your position in a few months. And you can sell a fresh call option as soon as your existing one expires. Finally, if Amazon drops by June 15th, you have a loss on your stock position, just like with any investment, but you've also got your $121.75 per share option premium. It acts like a profit buffer against your losses. As long as Amazon closes above $1,295, you'll at least break even. So you can buy a stock and earn a profit even if it drops. Not bad, right? But what happens if Amazon drops even further? What if your profit buffer isn't big enough? At that point, you still have your stock position. You can go right ahead and sell another call option. And you can keep doing that until Amazon rebounds. With every option you sell, you bring your break-even price down a bit further. Of course, this trade is purely hypothetical. To give you a complete picture of how the instant income calendar works, let's walk through a real trade we took recently. On October 16th, we spotted an opportunity in Guess. At the time, it was trading at $15.90 per share. The $17 November 17 call was trading at 35 cents per share. We bought the stock and sold the call. We earned our instant dividend of $35 per contract. Just 22 trading days later, on November 17, Guess was trading at $17.66. We had our position called out of the market for a profit of $1.10 per share. On each 100-share option contract, we earned $145 on a $1,555 of investment. In our case, we invested in 4 contracts. We earned $580 on $6,220 of investment. That's a 9.3% return in 22 trading days. This wasn't some random anomaly either. We've seen dozens of trades exactly like that one, like a 17% return on Micron in 12 days when the stock traded up, a 15% return on Activision in 34 days when the stock treaded water, and a 14% return on Allscripts Healthcare in 86 days when the stock dumped.
So a lot of people are saying, okay, I get that, right? I get how that can work. I'd like to see some of the other types of premium trading you do, but I want to make sure you understand with that, little explanation, kind of how the process works. So I got a notepad here. This is what we wind up doing, right? We wind up at any one time, it takes approximately 3 to 7 trades to fully invest our whole portfolio. So at any one time, we're in about 3 to 7 trades, and that's going to depend on your risk. It's going to depend on the individual pieces. What it is when you set up these investments in option premium is you can architect the exact investment you want to do before you even put any money down. And so you understand exactly where you're going to be with the type of risk you want to have, the type of payout to the bottom side, payout to the top side, et cetera, et cetera. But on average, you're going to be in anywhere from 3 to 7 investments at any one time. And then those investments last on average, and these, I'm taking this from my particular portfolio, last 5 months typically. Now that I have some of them that go right away within the month, and I'm investing in monthly. The reason why I'm investing in the monthly investments rather than the weekly investments is just because I'm dealing with a 7-figure portfolio. And so there's a lot more liquidity to be had. You can find the liquidity, or if you're in a smaller portfolio, anywhere from $300, $500 all the way up to 6-figure portfolio, the weeklies are fine. It depends on also how active you want to be. But when you're doing the monthlies, each one of your investments is going to last 5 months on average. Now, you have some that expire in the first month, we get exercised. And then I have others that go as much as 7, 8, 9 months. I have one right now that's been 9 months old. But on average, they last about 5 months. Now you might say, wait a second, why would I want to keep my investment in there more than a month or more than a week, more than one cycle? Why would you want to keep your money in a mutual fund that long or in a certificate of deposit? What's interestingly enough is in these trades, there's a couple reasons why we like to leave them in there as long as possible. Number one, you might want to take some notes on this, but number one reason to leave your investment in here as long as you can is because different than like a savings account or a certificate of deposit or a treasury bill or a mutual fund, your money doesn't grow linearly. Your money grows exponential. And I'll tell you why. Every cycle that you stay in the trade, the cost basis is reduced by the previous profit, and then you get a different profit. If you're familiar with the return on investment calculation, it's how much profit you make divided by the amount you invested. Well, if your profit keeps going up and your investment, your denominator keeps going down, your ROI, the longer you stay in the trade, is an exponential curve rather than a linear curve. So it definitely behooves us to stay in these things as long as we can. How many with the show of hands does that make sense? It's not linear, it's exponential. Yes, good. The other thing that we like to really emphasize about staying in there a long time, and this goes back to me being a very disciplined, aka lazy trader, if I am in the same candidate for as long as possible, that means I'm not having to do unending research and wasting times until midnight, 2 a.m. every morning looking for the next investment to be in, right? The least amount of time I have to do in researching and analyzing, et cetera, the better. How many with the show of hands would agree with that? In fact, cool. I like seeing all your hands go up. The scoop is, and this is from program participants, they've come back to me. I've actually been running this program since 2008. They've come back to me, and the number one comment is, it's boring. And I say, well, does that mean you want to stop? No, because it's freaking lucrative, AJ. And I like that. And I said, well, what are you doing with all your extra time? And then they give me all these stories. And Jeanette kind of gave you a little hint when I was first introduced. What do I do with all my extra time? I mean, I'm 45 years old. And one of the things I took up 2 years ago is learning how to do the trapeze. And I'm very good at it. In fact, I auditioned for a local performance here and was accepted. And I'm actually now a trapeze performer. Why? Because I've got all my money on automatic pilot. I do these trades. It takes me about maybe 10 minutes, 20 minutes an evening to just check on their progress for the day. I swap out one candidate about every 5 months. Right? That's kind of the dream lifestyle. So you got to ask yourself, am I in here to become, create for myself a job where I have to get on the phone with somebody every day, watch them trade and try to trade with them and spend all that precious time? Or do I want to do something with my time? That's kind of the difference between an investor and a trader, I think. And this is actually investing in our option premium. Hey, let me show you another example before we go any further on some of our results here of how we can structure a trade differently. So I got another queued up video here for you. Let's see how fast I can switch us over.
We love to find trades like this one we had recently. On January 2nd, Micron was trading at $43 per share. That was a little rich for my blood. I decided to use one of our variants. I use the variant where we sell premium against the stock's leap instead of the stock itself. It lowers the cost of entry to get into this kind of investment. It's just one of our alternatives in the instant income calendar toolbox. On January 2nd, the Micron 2019 $20 strike price leap was trading at $22.50 per share. The 46 January call was trading at $2 per share. We bought the leap and sold the call. We earned our instant dividend of $200 per contract, or $800 overall on our 4 contracts. Just 25 trading days later, on February 6, Micron was trading at $44. The Micron 2019 $20 strike price leap was trading at $24. We had our position expire worthless. And if we liquidated our position, we'd get our $24. And on each 100 share option contract, we would have earned $350 on a $2,050 investment. Because we traded 4 contracts, we earned $1,400 on a $8,200 investment. That's a 17.1% return in just 25 trading days. Now, as I mentioned in the last video, there is a way to juice up those profits. On this trade, we could have earned 630% on our risk, with a maximum risk of just 50 cents per share. Not infinite risk, but capped risk. You will be learning that strategy in this video. For now, just remember we're targeting a 6% total account return per month. If we can hit that target, every $1,000 in your portfolio would become $2,012 in 12 months. It would be $4,048 in 2 years. After 5, it's $32,987. And after 10, you'd be looking at $1,088,187. With a $100,000 portfolio, you could potentially withdraw $101,219.65 in income per year.
So that was actually taking our covered call strategy, putting it on steroids, and doing it against a leap. This is otherwise, if you guys have familiarity with the diagonal debit spread, that's exactly what we're doing. We like those because it lowers our cost basis. It acts and behaves exactly like a covered call, but gives us more bang for our buck, more leverage, if you will. We especially like it when we do it the other way around. So when we take a covered put and we do it on a back month, deep in the money, far out in time put option, because that takes a covered put and changes it from being a margin trade to being a cash trade. And why do I like cash trades? And so I'm going to put here as one of the things that I make sure I do on my side. I make sure I do all cash trades because I like doing this in my Roth IRA, right? Because I want to earn all this money tax-free. And so I haven't met a broker yet who will allow you to do a margin trade in a Roth account. But we can do all of our different trades that I've laid here, our investment trades, in retirement accounts and have that money, or if you're in Canada, RRSP. I believe there's a version just about in every country that's represented on this phone call of a way to an account where you can do this tax-free. So these are some of the benefits that I like to take advantage of. I have one last demo video to show you, and then I'm going to show you some acceleration things that I use to make sure that it's possible to make this as easy as possible. So let me show you this really quick.
Within 5 minutes from now, you could join them. Within 24 hours, you could have your first instant income calendar trade. It might look something like this. On October 26th, Energy Transfer Equity was trading at $16.60 per share. The $18 November 17th call was trading at 50 cents per share. The $16 December 15th put was trading at 14 cents per share. We bought the stock, sold the call, and bought the put. We earned our instant dividend of $50 per contract or $200 for our 4-contract position. We paid $14 per contract or $56 for our insurance policy, capping our max loss at 24 cents per share. Just 15 trading days later, on November 17, Energy Transfer Equity was trading at $16.31. We had our call expire worthless for a profit of 36 cents per share. On each 100-share option contract, we earned $36 on $24 of risk. For our whole position of 4 contracts, we earned $144 on $96 of risk. That's a 150% return on risk in 15 trading days, 22 total days. We have done that over and over each month, always capping our risk. No infinite risk. The great part is we continue to lower our investment month in and month out, cycle after cycle. If we were to liquidate our trade now, we'd walk away with a total profit of $956 on a total investment of $6,380 for a return on investment of 15%. But we're not going to do that. Our current return on risk is infinite. Let me explain. After all our cycles, our current instant dividend is $1.22 per share. That reduces our cost basis to $15.38. However, our risk is capped at $16 with our put insurance. You see, we have a risk-free trade. Isn't that amazing? We can just continue to let this trade run on and on and on, and we'll just earn income every cycle, no matter what the market is doing. A return like that isn't abnormal. We've also had trades like a 43% return on the index in 75 days when the stock traded up, a 9% return on Guess Jeans in 31 days when the stock treaded water, and a 2% return on Bloomin' Brands in 59 days when the stock dumped. Our goal is to hit a 6% return per month. If you can hit that target, every $1,000 in your portfolio becomes $2,012 in 12 months. It would potentially be $4,048 in 2 years. After 5, it's $32,987. And after 10, you'd be looking at $1,088,187.
Everybody's going to get off the line with us here and be like, that AJ just really emphasizes compound interest, but it's really been the way that I have been able to set myself free from ever having to do anything besides things I like to do. Not sure if those of you who do know me and have been around me, you also know that I have a tendency to just hop on a plane and go move to foreign countries for a while. So for instance, in 2014, I got on a plane and went to an island in the middle of the Mediterranean called Sardinia. And I did my classes at night. I did my trading during the evenings, and during the days all I did was hang out with folks that speak Italian and did a lot of scuba diving and just enjoyed myself. I lived there until my visa ran out 6 months later. This is the type of lifestyle I really dig. Let me go ahead and make sure you're looking at the right screen here. So the scoop is where do I find these candidates in order to make these type of returns? Now, what you're looking for is premium in the different option chain on the underlying symbol, right? That's where we start. And it takes a little bit of time. If you've got an Investor's Business Daily e-tables subscription, you can totally do screening that way. But one of the accelerator tools that I put together, mainly for myself, but I've been using it for over a decade now. Let me go ahead and bring over a web browser, and I'll just log into our Trading Trainer web portal area. This is what happens if you're part of the program and you sign in. We actually have a simple tool that runs every evening that finds the candidates for us to do these type of investments on. And it gives us what we call a scenario test all written out for us that we can then do those different strategies on, turbocharge or supercharge the results. And we keep this ongoing run of this tool because these candidates that are identified can be traded in 3 days, can be traded in a week from now. Remember, our strategy, if you saw, for instance, on our on the actual trades that I was demoing in the videos, you'll notice that I'm not trading every day. I'm trading maybe once a week. And how did you like that last one where we were actually installing protective collars? And there were economics in order to do that. Let me tell you, so with the market being the way that it is in the last couple of weeks as kind of the emotions have run high, here's something we know for sure, and that is our premium trades, our premium at expiration of the option will always be zero. The premium is always worthless at expiration. That's something that is just as always true as death and taxes, which you can't get away from those either. The question is how much can we sell our premium for on the front end? Here's the secret. When investors are skittish and scared, when there's a whole bunch of uncertainty in the market, you know, we just had somebody decide to leave our latest administration here in the United States. Just last night, he announced after the market closed that he's not going to be an advisor for our president anymore. And this is a Goldman Sachs guy. Well, gosh, the market this morning was insane. Well, that is actually when you are selling option premium to your benefit. When the market is insane, the option premiums go up. The buying pressure for options as hedges goes up, which drives the price up. And because we know as premium sellers that no matter what the price is when we sell it, it's always going to be zero at expiration, this is actually a benefit for us. We love it when there is volatility and uncertainty and confusion in the markets. that means that our premium trades are just going to go that much higher in returns. It gives us extra economics to use in the case of put protection. Our return on risk goes through the roof when we collar our downside. It creates risk-free trades, and it creates guaranteed profit. And so we actually strive and thrive on the uncertainty in the markets. You won't hear that from anybody who's trading stocks or forex or not futures, but stocks or forex or exchange traded funds. They'll be telling you, they'll be trying to tell you to stay calm, the markets are fine, da 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 da. I'm telling you that what you see and what you believe is true, and you should find a strategy to trade or to invest in that actually thrives in that situation, like for instance selling premium. So we have this accelerator tool that hands us on a silver platter candidates to pursue. It even gives you a link right over to TradingView, so you can go ahead and figure out exactly what it is, if there's some greens or red flags that you need to worry about. We also, with this program, of course, have all the tutorials so that you know how to use the tool. And the best part about it is that we have a workshop every Thursday where Coach Jay and or I will come online, and you bring your prospective candidates to us, and we're going to work them out. Not only are we going to work them out, but if they're good, we're going to trade them, and we're going to make them public so that you can see what the returns are going to be, right? And so we have a workshop that people can come to. They can ask all the questions they want. We can work through a trade. We can architect it down to the last detail. And then you can go away every Thursday with a potential candidate to add to your portfolio investment. Not only that, every once a month, it's usually on the Tuesday after options expiration. Options always expire. The monthly options always expire on the third Friday of the month. Every Tuesday after that expiration, we have a learning webinar where we take what we already know and we kind of take it to the next level. We take into consideration what's happening this upcoming month. This last one we did on February 20th was all about using those collars, building a risk-free trade from day one, getting as high a return on risk as we can. And we actually explained some live examples. And all those workshops and the monthly webinars, as you can see here, are made as replays. So if you can't make the live, you can definitely join us later. You might have also noticed, as I was clicking around, that you might see this thing that's called the 6% Protocol Tool Beta. We also, over here in our community forum, where people are talking about these type of investments, and people are private messaging me to ask me for, because one of the things I like to do is make sure that you're highly successful. And so in order to make sure you're highly successful, if this is the first time you're investing in this, or you've invested in these type of trades before but maybe in a different way, and you want some hand-holding, people private message me. And I actually see a couple people on this call today who are part of this program, and they'll probably, they could tell you if they were unmuted that it's not unheard of that I'll just call you on the phone and we'll work this through together. That's how important it is to me that you can get these investments down. But as you can see here, there's an area that says 6% Protocol Additional Picks Beta. So I am constantly tweaking the screeners and creating new screeners that find us the best picks. And this is kind of where you can benefit if you wanted to be part of this program in saving time. I'm doing all the hard work for you so that you can use these picks that are handed to you on the silver platter to create these investments, right? All you're going to be doing is making sure the pick fits your trading style, your trading limitations, whatever kind of personal trading boundaries you have. Make sure that the pick fits that. You're going to do your last minute, check with, does it have dividends coming up? Does it have earnings coming up? Can we deal with that? And if you're unsure, you're going to bring the pick to us on Thursday night, and we're going to architect it live in front of everybody else. And so it really is a scenario where you can get into this program and do what we're doing. Fully invest a portion or your whole portfolio in 3 to 7 trades. Trades typically last about 5 months. They're all considered cash trades, so they can be done in a retirement account. You're probably only going to be cycling in new candidates, maybe at the most 2 per quarter. Now, you might be saying, well, what is this all about, and what sort of protections do I have? Can I see your results? Yada, yada, yada. So let's talk about this. First of all, here are some of the returns. You saw some of these. 17% on Micron in 12 days. 15% on Activision. This was in one of the videos. 14% on all scripts when it totally went into the toilet with the poo-poo icon here. We had Caesars that went up. St. Joe's went sideways. Community Health, this was one of my favorite ones. Despite the underlying symbol going down, and it went down, it divided itself in half. We got into it at about when the underlying symbol was trading at $11. It went down to $5, and we still walked away with 17%. You saw the one on Yandex. That was a real winner, 43%. Guess Jeans gave us 9%. Bloomin' Brands, the Outback restaurants, they really went in the toilet. We still pulled out 2%. Baidu gave us 8% in 11 days. Huntington Bank, 24% in 38 days. Again, any number that's over 6% is going to help us get our doubling of our portfolio every month. So here are the 5 major points that I really want you to write down in your notes. First of all, somebody who wants you to buy and sell options, or I should say buy to open and sell to close options, basically use them as leverage. It's a sucker's bet. You're going to be spending a lot of time in front of the computers, and it's going to be more of a shotgun approach. You have to get used to the fact that a lot of your trades are going to go sour, and you better have your money management in place. Otherwise, the sourness will be big. You'll have quite a few trades that will do fantastic, but you'll have to, set yourself up and realize that some trades are going to go sour. Now, I've had a lot of people I've worked with through the years where failure really makes them go under their covers and go into some deep depression. So if you have a problem with failure, you don't like to fail, buying options, you have to just come to the conclusion that you're going to have to be able to learn how to deal with failure, or it's not for you. And if you want to have something that is a solid investment where you put your money in and you don't worry about it, trading options is not for you, right? Instead, you want to use options as an investment, sell premium the way we do with the instant income calendar. Number 2, you can generate serious income selling options. Number 3, you can insure your position for up to 20 times return on risk. That's what I showed you with the ETE trade. And when we do our investments, we're using a sniper rifle. We don't even put money down until we've got the exact plan we're going to be pursuing. We're not doing probabilities. We're not doing shotgun trades. We're investing in the most reliable variable of the option, which is its theta decay, its time decay, the fact that it will always be 0 at expiration. And the other major point is, if you want to really do a thorough job screening these, you have to put together your own screener or get a hold of a screener in order to find those premium trades, because there's not enough hours in the day to do a thorough job. This is something that needs a computer algorithm running. Now, I do want to show you, I put a link into the chat area, and I'm going to go ahead and click on it now, the optioninvesting.org. I'll actually right-click on it. Or maybe I'll just type it in. Let me pull up my browser again. It's actually not a hard URL to know. So optioninvesting.org/7MAR18. 7MAR18 stands for today. So optioninvesting.org/7MAR18. This brings you to a page that will explain to you about the instant income calendar, show you some of our results, tell you what is part of the program. It's a 6-month program, okay? And the reason it's a 6-month program is because I want to make sure you're going to be extremely successful. So the 6-month program, you can see right here, it's $497. That's a special price for today. It's usually $997. And I have a guarantee for you. It's called my Double Your Money Back Guarantee. So I want you to do the program for 6 months. I want you to really do it. I want you to be part of the workshops or watch them on replays. I want you to use the screener, and I want you to learn how to invest your portfolio this way such that it's making the type of returns we are. If after the 6 months you're not making money, you got to just show me how your portfolio is working. And if you're not ready to do real money and you want to start doing the learning process on this, just show me in your paper trading log that it didn't work. Not only will I give you your $497 back, I will take $497 out of my pocket to give to you. That's how sure I am that anybody can do this program, especially with the screener handing you picks on a silver platter. Here's somebody's experience. This is Charlene. I love Charlene. She likes to write me early in the morning. She said, I want to take this opportunity to tell you my story about how I used the 6% protocol tool. She was a teacher for 29 years. She got sick. She actually got cancer. And so she got to the point with her chemo that they asked her to stop being a teacher, that they didn't think, the school thought it was a liability to have her there. She had 13 years before she would qualify for her retirement left. So she was cool with that. She understood why they were telling her it was no bueno. And she thought she was going to die anyway, so she was all peaceful about it. But then a miracle happened. She recovered. And doesn't that suck, right? That your life is now saved. However, now you've got more debt than you know what to think about, and you have no livable retirement because you were kicked out of your job. So she had no livable retirement coming in. She was not able to collect for 10 years. So she got interested in the stock market. The rest was history. Thanks to AJ, she's not only making a living, she's actually going to start traveling. She didn't have to go back and become a teacher again because after a couple years of doing this investing with us, she now can go travel. She actually, she's been doing this with us for a while now. She actually just paid off her mortgage. She sent me an email a couple of months ago and said, I just paid off my house. I just want to let you know. So the 6% protocol tool is very easy to use. All you do is read a daily table, find a stock you're interested in, follow the strategy set out for you. I use this along with other strategies to diversify my financial plan. I recently made 14% by just spending about 15 minutes reading about a company, following the chart, and then waiting for expiration. It's so easy. So I wanted to tell you that anybody can do it. If Charlene can do it on her deathbed and then on her recovery bed, you can do it. And I want to throw something in. Again, this is just for Jeanette and her team there, the Trade Thirsty team. Anybody who is interested in the program, we actually will get you on the phone with one of our coaches, because you know where you are right now, and you probably have a good idea where you want to be financially and also in life. And all of our coaches, I mean, these guys are helping these inner city kids get from their point A to point B. They know the fastest route. So they'll listen to you. We'll ask you to fill out a questionnaire so that we get a better idea of where you want to go. And then they'll actually plot out what you can do during the 6 months you're with us in order to get from point A to point B. So you're not distracted with all kinds of stuff. They'll say, use the tool every night. And then they'll probably also tell you, and with the rest of your time, go do something that you've always wanted to do, right? So I'm going to throw that in. These guys, usually this is like a $600 thing that we offer. There's the double your money back guarantee. So what I'd like for everybody to do is I'd like you to go right now to optioninvesting.org/7/March 18. I don't want you to pass go. I don't want you to collect $200 like you would in a Monopoly game. And I want you to do it because I believe you deserve it, no matter where you are in life, no matter what your intentions are with trading or whatever. This you could do in the background, right? Like I said, there's very little time you're going to be spending managing this portfolio. If you're working a day job, then this is perfect for you to build up that nest egg so that in a couple months, maybe a year, 2 years, whatever it takes, no matter, depending on what you start with. If you start with $500, it's going to take longer than if you start with 100 grand. Put this in your retirement account. Whatever you want to do, this is your, plan to success. You deserve it, and of course your family deserve it too. Right, so let's see if we got any questions. I've got about 4 minutes, so we'll see if we got any good questions I can answer before Jeanette said she's going to move us on to the next program. Again, please visit optioninvesting.org. It definitely is worth your while. You'll know you're in the right place when you come to a page that looks like this. There it is. I'll make it small so you can see the web address as well. I put the web address into the chat area. But when you come to this page, by the way, we can do this on a payment plan as well. So there you go. Minimum account size for option selling. We have folks that start with as little as $500. There's plenty of candidates that we use. Any auto trading. Most of our traders are using contingent trades with their broker. So what we do is we create a plan on how we're going to execute the transactions, and then totally you can plug that into your trading software and have the trades go during the day. Ed says everyone makes a money-back guarantee but wants you to pay them to prove their program works. My answer to you, Ed, is if I was giving this away for free and not helping my foundation kids, I would say to you, it's just like when my brother-in-law likes to give me stock advice. What you pay for is what you get. So if somebody's willing to give you stock information, option information for free, that's pretty much what it's worth. Nothing. Do you have strategies? Andrew's asking me, do you have strategies where you don't buy the stock? You better believe it. Or in the case of a covered put where we short the stock. What we like to do, and it's one of my favorite things to do, is instead of doing the stock, we're going to buy a deep in the money, far out in time option as a stock replacement. And so what we're actually doing, I call it, writing covered calls or writing covered puts on leaps, or supercharging them. So you're not actually using the actual stock. For you option investors out there that have some experience, what we're creating is diagonal debit spreads. And they are some fantastic trades to go. I love those. But the key here, and there's so many other premium trades that you could be doing. There's iron condors, there's vertical debit spreads, you can get into calendar spreads. And what I'm trying to do here is, number one, keep it simple. But number two, those trades are like buy rights. And if you don't have experience with option trading, that's going to go over your head. But when I do a covered call, when I do a covered put, when I do a diagonal debit spread, whether it be a call or a put one, I can leg into the trade very easily. And that's exactly what I want to do. I want to create a two-step plan on a sideways channeling premium heavy trade, underlying symbol, whether it be an exchange traded fund, an index, or an equity. And those are the candidates I'm really looking forward to. So I think I'm at the end of my time. I've got some most of the questions have been answered. Jeanette, I think I'm done with my presentation here.